So today I wanted to break down how you need to report investments in financial products in your Norwegian tax declaration. These products can be shares, funds, bonds, options, currency, derivatives, and virtual assets. Norwegian and international financial institutions are sending out yearly reports right now. And I hope that the information I give you today will be useful when you need to fill out your Norwegian tax declaration in April. It's worth noting that I'm not a certified specialist, and all I do here is read, translate, structure, and simplify information given in official sources like Skatteetaten.no, their tax book ABC Skatt, that is in Norwegian, and some documents from Norwegian government related to taxes. First, I will cover general rules of taxation of financial products in Norway. Then we will talk about rules for taxation of financial products that you might have in other countries. And in the end, I will show you where and how to fill in this information in your Norwegian tax declaration if it's missing. The Norwegian tax year runs from 1st of January to 31st December, pretty much the same as in many other countries. The processing and payment of tax must be completed by 30 of April of the following year. Usually, financial products you own are pre-filled in your tax return. This applies to shares you own in private limited companies and foreign companies that are registered on the Oslo Stock Exchange. If that is the case, you need to check the information. If the information is not there, you need to fill it in and add the method for double taxation for the tax deduction of taxes you paid abroad, if you paid any. Let's start with the situation where you own shares in specific companies called aksjer in Norway. If you have gains or dividends from the stocks, you need to pay taxes. The tax rate for shares in Norway is 37.84% in 2024. With that, you can apply also the deduction for risk-free return, so you pay less tax on your share income. This deduction varies and is based on a few factors, like when you bought your shares, if you sold them, the value, and if you already used this deduction in previous years. The link for the calculator is in the description. It's very straightforward and easy to calculate. If you didn't use this deduction before, or if the gains were less than the amount of the deduction, then it will roll on to the next year and add up to the next deduction. So you will get a bigger amount deducted from the taxes. If you sold your shares at a loss, you can claim a deduction of 37.84% for the amount of lost money. Now let's look at funds, or verdipapirfond in Norwegian. Here, the tax percentage depends on the type of fund you have invested in. Funds are different and combine stocks and other products like bonds, for example. If the fund consists of 80 or more % stocks, like equity funds, for example, then you will pay taxes at 37.84%, like dividends on shares from the previous example. If the fund has less than 20% stocks and the rest are other assets, then all will be taxed as interest at 22%. If the situation is something in between 20 and 80, then it will be divided accordingly to how much stocks fund has. One part will be taxed at 37.84% and the other at 22%. Here again, for the stock part, you will have a risk-free deduction if the fund has over 20% stocks. Exactly the same applies to taxes if you invested in endowment insurance. It will be fondskonto in Norwegian. It depends on the ratio of insurance component and other investment components. So it can be everything from 37.84% to 22% taxes on gains. Income from crypto and other digital assets is considered capital income and taxed at 22% rate. The loss has a deduction of 22%. You can also ask for a deduction of 22% on expenses related to mining, for example, transactional costs and fraud, but you need to present all the documentation to tax administration office. The last thing I want to mention here is the taxes that you need to pay from your share savings account, or ISK. If you withdraw dividends from such an account, it will be taxed at 37.84%. As long as you do not withdraw money, gains are not taxed, and you can make deductions on losses as long as the account is open. To claim a deduction on loss, you will need to close and delete your account. I hope it's more or less clear on the Norwegian part of it. If you have some questions, send them down below and I will try to help. Now moving on to topic of foreign financial products. Here all is quite easy. Norway has agreements with many countries about withholding tax. In most cases, you will need to pay 15% withholding tax in the country where you hold your financial products, or whatever taxes are agreed upon between Norway and this country. When you report your investments to the Norwegian tax return, you will need to pay taxes on top of it, depending on investments you have. Shares will be taxed at 37.84%, so you will have to pay extra 22%. You can also ask for deductions for the loss, the same percentage, and use the risk-free deduction that I already spoke about in the first part of this video. Essentially, you will need to report the taxes you already pay in other country and pay the difference in Norway. In cases where you paid more taxes in another country than what Norway requires, you can ask for taxes back in the country where you have your investments. You will need to see yourself how to apply for deductions in those particular countries. To ask for a deduction for withholding taxes that you've already paid, you will need to use the method for double taxation in your tax return. Now I can show you where to search for this in your tax return and the general principle of filling it out. So what you want to do is open your tax declaration and go to the section called Finance. Under existing information, you will see an option to add another information. In the pop-up window, choose the product you would like to add. Let's say we want to add some shares, and click on choose whether you want to add foreign shares or Norwegian shares. Here you will need to fill out information about your shares. Country, for example's sake, I will just input random stuff here to explain a few things. Let's choose the USA. Rest of the information, numbers of shares. Then you fill out information according to your reports, either gains or losses. As you can see here, you can change the currency. In general, by clicking on the question mark by each section, you can get a good explanation of what you need to fill out. Let's say you have shares worth $200,000. Dividends for $2,000, and you paid withholding tax in the US. When you scroll down, you will see an option to add more information. We need to click on it and choose method in the event of double taxation. Here we choose credit deduction. After you save it, you see that down below you will have a section called method in the event of double taxation. To deduct taxes that you have paid abroad, you need to click on yes and add the amount of taxes you have paid. In this case, we choose the country, put in dividend amount as in the previous form, choose the currency by pushing add more information again, and choose US dollars. Let's say we paid 10% taxes. You add the paid amount to the first window and in paid taxes and submit. After that, you will see the changes made in the section method of double taxation. If everything is right, you will see it appear in your final summary in the tax return report. What you need to be aware of is that the amount of the taxes you put in the section finance and in the section for double taxation are the same, otherwise system will give you an error.